特朗普嘅第二任期已經過咗4個月，各種彈弓手嘅經濟政策令全球市場好似坐過山車一樣。一方面，特朗普堅持對全球佔美國便宜嘅國家大徵關稅，又要求聯儲局盡快減息；另一方面，又不停話要削減財赤、縮減開支，但近日又繼續推出 Big Beautiful Bill， 要求大幅減稅。資產配置諮詢公司 Gavekal 共同創辦人兼行政總裁 Louis Vincent Gave 近日就同我哋傾到最近嘅中美關稅博弈，同埋分析大家關心嘅美債、美元下跌、貿易戰走向，同埋佢對中國最新經濟數據嘅一啲睇法。
The Geneva meeting between the U.S. and China's trade representative actually it was quite a surprise that China agreeing to lower the tariffs to 10% and U.S. to 30%. Do you see that as like a strategic retreat for Trump administration, or is it a genuine opening for negotiation for both sides?
I actually think it's perhaps the latter, or maybe it's me wishful thinking, and I hope it is the latter. Because if we stay at 30% tariffs on China, even 40% depending on the goods, even 40%, it's going to impact U.S. growth. It's going to impact the U.S. consumer. It might lead, in fact, to even bare shelves in stores. So I want to hope that it's the start of a better relationship. Now, one of the reasons I hope it's the start of something better is that if you look at that 30% that you mentioned, it's essentially the 10% that everybody got, plus the 20% for fentanyl, because the U.S. says, look, China sells all the precursors for fentanyl to Mexico, and then Mexico makes the fentanyl drug, and then lots of people die in the U.S. And the fentanyl is a real crisis in the United States. You have about 80,000 deaths per year. To put things in context, in the whole Vietnam War, the U.S. lost 75,000 people. So every year, the U.S. loses more young men, because it is mostly young men, more young men to fentanyl than it did to Vietnam. So you could see why Trump would want to be seen to be doing something about this. Now, of course, blaming China is the easy path. It's to say, oh, we have a fentanyl problem, not because we have young people taking drugs, but because China sells us drugs. So it's an easy path for the U.S. administration to deal with. Having said that, so he wants to be seen doing something. So he says, okay, I'm going to ask China to stop selling the precursors to Mexico. And if China does that, and that's a very small business for China. So China could say, okay, fine, we stop selling the precursors to Mexico. And then the US brings the tariffs back to 10%, at which point, 10% isn't that big a deal. We could have another positive surprise in the coming weeks and months with tariffs going from 30 down to 10. Now, of course, this will most likely happen if inflation in the US is high or if you get supply chain dislocations.
But to be honest, some analysts would say that Trump actually blinked because of the bond market's pressure, not the inflation or the economic situation. What's your take on that?
A good friend of mine says about Trump that it's the taco trade. And the taco doesn't stand for a Mexican dish, but for Trump always chickens out. And I think there is some truth to that. I think the US blinked because essentially I tend to believe that Trump follows policy a little bit like he gives his speeches. I don't know if you ever watched his speeches on TV, but during the campaign he would go to these rallies and he would stand for 3-4 hours and talk about lots of things, which is pretty impressive for a guy his age. He would command the attention of the crowd for long periods of time. And what he would do, he would come in unprepared, no notes. He would start talking about something, and if he can judge very quickly if the crowd likes it, then he does more of that. And if the crowd doesn't like it, he drops it and moves on to the next thing. And I think he does policy in the same way. So he tried on the tariffs, and the bond market didn't like it, the equity market didn't like it, his big donors didn't like it, his voters didn't like it. And so he switched. He said, okay, I'm going to stop talking about tariffs and I'm going to start talking about tax cuts. And so for the past few weeks, it's all been about the big, beautiful bill going to Congress. and it's been all about tax cuts. Now, suddenly, he revived tariffs again by putting in the 50% on Europe, and the market again didn't like it. The equity market kept going up, and he put in the 50%, and immediately the markets seemed to stall. Yes, I agree with you. I think that his ability to keep imposing tariffs is limited, and yes, perhaps not by the equity market, but by the bond markets. The US has a lot of debt to roll over, and this year we'll be running a $2 trillion budget deficit. So the rate at which this debt is issued does matter.
Actually, China has taken a firm stance since the Liberation Day, which is pretty different from how they dealt with Trump first term, right? So how well do you think China is performing since April 2nd? And do you think China has gained an upper hand so far in this phase of trade war?
Yeah, I think, when you look at how China responded, I think it was the result of a few things. And yes, you're right, it responded very differently than when it did the first time around. I think the first reason was intense frustration. I think when President Trump came in, Beijing, Xi Jinping, the CCP, tried to get in contact several times with the Trump administration to discuss things, even including after the imposition of the fentanyl, the extra 20% that was put in on day 1 or day 2 of the Trump administration. The Chinese government kept trying to reach out to the Trump administration and never getting a response. So I think a lot of frustration had been building up. So that was the first problem. The second problem, I think, if you were China, is by the time the tariffs came out, and China was essentially getting charged 30, 40, 50% depending on the goods. So this was going to have an economic impact regardless. And so, then the government was left in a position of, do we take it on the chin and not respond? Or politically, for our own people, we have to be seen to be fighting back. Clearly they chose to fight back, which perhaps was the right response, because now they've essentially, at the very least, gone down from roughly 50 down to 30. So the outcome is somewhat better. And like I said earlier, there is still the possibility that you get rid of the last 20% of fentanyl and you end up at 10%. Now, if you end up at 10%, which is a big if, but if you end up at 10%, the impact on the Chinese economy will be very modest. It really won't matter very much.
Let's move on to talk about China's latest April economic data. Looking ahead, China's April data showed manufacturing PMI dropped to 49, which signals contraction, despite we can see that the Q1 GDP growth is 5.4%. Are you concerned about this PMI decline that may point to a deeper vulnerability in China's manufacturing?
So that's a great question. So what's interesting is that wherever you look around the world, and China is definitely an example, but the same is true to some extent in the US and Europe, etc., is you've seen the soft data, essentially the surveys. And you mentioned the PMI. The PMI is a survey. They go out and they ask a bunch of CFOs everywhere and CEOs everywhere how their business is doing. And the soft data everywhere, whether consumer confidence, PMI surveys, business confidence, all the numbers almost everywhere in the world are pretty poor. The hard data, meanwhile, is more mixed. And the hard data being things like retail sales, being things like industrial production. That is not as bad. Now, very often, in any economic cycle, the soft data turns around first. So before you get to a recession, your PMIs go down, your consumer confidence go down. But it's not because these things go down that you will end up in a recession. So here we are at an interesting point where surveys are bad, and we know why they're bad. The news flow has been terrible. If you're a business today, like I was saying earlier, you have no clue what is going to happen 12 months from now. So you're not very likely to invest very much. So you've got that overhang which is undeniably there. Now, if tomorrow, let's say we get rid of the fentanyl tariffs and you move back to 10 or 20% tariffs, I would expect the PMI surveys to come right back. So I think for now we have to assume that the PMIs are probably right. We're going to see less capital spending, less employment, less growth, and this puts the onus on the Chinese government probably to do more stimulus and to perhaps spend a little more at both the central and the local authority level to prop up the growth.
Right. Do you think the consumer demand is also an alarming issue in China right now? Because we can see that the retail sales growth slowed to 2.3%. Yeah. Do you see this as another warning sign for China's economy?
Look, I think it's been tough being a consumer in China, right? In recent years, confidence has been crushed, mostly because most people have most of their wealth in real estate in China, and we've had a 3, 4, 5 years real estate bear market in most of the major cities. Now, the good news is the real estate bear market might be coming to an end, thanks in part to lower interest rates, thanks in part to slowly rising incomes and property prices that have come down. The affordability ratio in China today is as good as it's been in 20 years. Now, a lot of that has been the falling interest rates, but the cost of servicing a mortgage in China has gone from roughly a third of the median salary 5 years ago to just a little over 20% today. So if real estate is bottoming, then consumption should start to do better. Now, on this note, we're taping this in late May. A couple weeks ago, we got all the data from the May Golden Week. May 1st and Buddha's birthday, and so it's a big week. The first week of May has a lot of people are on holiday, and what was quite encouraging is the internal tourism numbers in China have never been this strong. You had 6.9% year-on-year growth in the internal tourism data, whether you looked at train tickets being sold and plane tickets being sold and hotel bookings. And so the reason I find this encouraging, 6.9% year-on-year growth in tourism spending relative to the 2.5% in retail sales, is that tourism is one of those things. You don't need to go on a holiday. You don't need to go do tourism. It's one of those things you do when you start to feel better, when you start to have a little more money in your pocket. You might say, okay, let's go on a holiday. Let's go visit Beijing. Let's go visit Shanghai. Let's go visit Guilin. So the fact that the tourism numbers were at record highs gives me some comfort that A, the Chinese economy is not imploding, and that B, that the worst for the consumer may be behind us.
So let's talk about the U.S. government debt situation and the bond market.
Oof, let's brace myself.
The U.S. Treasury projects the debt limit X-day will be arriving in August. Also, there will be a significant Treasury debt that maturing in June next month.
Yep.
So do you think that that will be a routine debt ceiling increase? And other than we would see something like more like significant disruption happening this time?
We'll get the debt ceiling increase because A, we always do. But more importantly, the Republicans are usually the ones who fight debt ceiling increases. But they only fight it when there's a Democrat president, not when there's a Republican president. So yes, we will get the debt ceiling increase, and that'll be that. Now, the reality is that yes, the U.S. has roughly 37 trillion of debt, U.S. dollar of debt outstanding, trillion with a T. That in the next couple of years, it needs to roll over roughly 9 trillion U.S. dollars. And then it also adds roughly 2 trillion a year through the budget deficits. So, in the coming months, the U.S. probably has to roll over roughly 6 and then an extra 2 on top of it. How does it do that? Well, especially if at the same time it's making the debt less attractive to foreigners by, essentially talking down the U.S. dollar, by bashing foreigners. So the answer is severalfold. First, the U.S. you can roll over at the short end, which is what Janet Yellen, incidentally, has been doing in recent years. Is if I can't go out and issue very long-dated bonds because the yield is too high, I'll issue short-dated bonds. So that's, I think, number one, what they're doing. Number two, I think what they can do is embrace financial deregulation, and that's what they're doing today. Embracing financial deregulation, and in so doing, giving the commercial banks the ability to buy more bonds. And we're going to see this. We're about to see a wave of financial sector deregulation, and without banks, insurance companies will be able to buy a lot more bonds going forward. And I think this will be probably enough to fund the budget deficit for this year and next year.
Something also happened lately is the Moody's recent stripping.
Yes.
The
AAA.
AAA of US, which is the last AAA credit ratings.
Well, look, a downgrade is never great news, right? You'd rather always get an upgrade saying, hey, you're doing a great job than, hey, you're doing a bad job. Here's a bad grade. So it's not that great. Having said that, I think that for sovereigns, for individual countries who issue debt in their own currency, the downgrades don't matter very much. The upgrades, the downgrades, they don't matter for the bond markets. They might matter for the currency, because if you're the United States, you can always pay your debt back because you've got a printing machine that prints US dollars.
Yeah.
So I think what Moody's is telling the world is, look, if you're buying US dollars today, you're going to get paid back in monkey money. You're going to get paid back through the printing press. So it's not that great an investment. And I think Moody's is right. And so for me, the Moody's announcement is perhaps more bearish on the US dollar than it is on US bonds themselves.
How would you comment on the investor confidence for the US assets or bond market right now?
Look, the US has been such an outperformer for 15 years. And I know everybody's running around today saying, oh, US exceptionalism is dead, etc. I've been doing the same. But the reality, to your point on confidence, US has been such an outperformer for so long that the default mode with people is still to think, oh, I need to buy the dip. Oh, Microsoft is down 10%. Great opportunity for me to buy. So, the US runs twin deficits of 11% of GDP. The US keeps on pushing dollars abroad to the rest of the world. And the default mode of the rest of the world for years was to buy US treasuries with these excess dollars. Now it's probably, in recent months, it's been to buy US equities. But, I think we're coming to the end of that.